Hi everyone, Brian here from Be Listed with your Kilmarnock property update for December 2025, reflecting the activity we saw throughout November. This is across the KA1, KA2 and KA3 postcode areas, so everywhere surrounding Kilmarnock. As we head into the final month of the year, the market is showing the classic seasonal slowdown that we'd expect to see at this time of year. But there are actually several encouraging signs for both buyers and sellers in the market. Stock levels are tightening, which was what we'd expected to see. Fewer homes are coming to the market, and despite the wider economic backdrop, sales agreed remain pretty resilient in the Kilmarnock and surrounding area. Overall, the market is behaving exactly as we would expect as we move closer to Christmas. So let's start with the sales market. Available stock has dropped to 285 homes, down from 227 in October, and also slightly down on this time last year. This level is typical for November, as many homeowners hold off until the new year, the famous spring market as we call it. For sellers already on the market, this means that less competition, more visibility for their stock, and a higher chance of getting the price that they're looking for. New instructions fell quite sharply to 80, compared with 126 in October. Again, this is exactly what we'd expect to see pre-Christmas. Most people planning a move are now aiming for the spring market, January, February, March, which naturally supports pricing for anyone selling right now. Sales agreed for November came in at 83. That's down from October's unusually strong 103, but still higher than the same time last year, which shows demand is still there. Well-priced properties are still securing the buyers quicker and getting the better prices than properties that are not so well presented. Time on the market now sits at around 355 days on average, slightly improved from October, but still higher than last November. This is a pattern we've been seeing in Kilmarnock versus wider areas taking longer to sell right across the year. Buyers are more selective and affordability is clearly playing a role, but they are still making decisions when the property and pricing are right. So the right property, the right price, the right area, selling fairly quick. Anything else is taking a wee bit longer. So overall, when you pull all of this together, November gives us a balanced picture, very, very balanced between October and November last year, all of the figures. Supply is tightening quickly, demand is steady and even outperforming last year. Pricing remains supported by the lower end level of competition. Time to sell, while elevated, is trending in the right direction, so we're coming down. Less stock and less properties coming to the market's helping with that figure. It's classic of this time of year, Christmas market, stable, quieter, loads of opportunities for sellers on the market, not a lot for buyers, but a good time to buy if you're buying. Turning to lettings, the rental market across Kilmarnock remains extremely strong. Tenant demand is high, especially for well-presented 2 and 3 bedroom homes, modern flats and anything close to transport links and major schools. Stock is limited and most good rentals are being secured within days. And I kid you not, guys, we've got a waiting list for 2 bedrooms in just about every town and village. Average rents in East Ayrshire continue to sit just under the 620 to 640 mark, with family homes achieving comfortably above this. The temporary rent cap's now fully expired, the market is still adjusting. Existing tenancies remain under transitional rules. For landlords, as I've been saying all year, it's a great time to review the rents within the legal limits. And if you need advice on this, please come back and talk to us. Voids for landlords, very good opportunity to get back to market rent. So again, if you're needing advice for that, we're here to offer that and we can do that for free. On the mortgage side, rates have stayed relatively stable. There wasn't a change in the budget. There's nothing in the budget that suggests we will see a change. 2-year fixes are coming in at around 5 to 5.2%, and 5-year fixes around 4.5 to 4.7%. So much more affordable levels than we've seen 2 years ago. There's a growing speculation that we may see a small base rate cut in early 2026. Nothing is guaranteed, but it's definitely influencing buyer sentiment. What we're seeing on the ground is buyers who are active and motivated, but working within tighter affordability limits. Negotiations now tend to centre around those affordability ceilings rather than a lack of willingness to move. So buyers are getting outbid basically for the properties that are popular. Hope that makes sense. Outlook for winter and early 2026. Looking ahead, the next few months typically set the tone for the year. For sellers, stock levels are low, so listing in early January can give you a real advantage before the spring rush. Now, I've been kind of trying to advise that since September. Get yourself on the market in January and you'll get ahead of the spring rush. You'll see more choice from February onwards, but competition may also increase with the amount of properties coming to the market, as I'm hinting at. Demand is expected to stay as high. Some first-time buyers continue to delay buying due to mortgage pressures. Overall, Kilmarnock remains steady, reliable and resilient market heading into 2026. If you're thinking of selling, letting or investing in the Kilmarnock or surrounding areas, or you'd simply like a tailored data-driven valuation, I'd be happy to help you. I'm Brian from Be Listed. Be listed, be sold, be let, be managed. Contact details are on screen and in the post. If you need us, give us a wee shout. Thank you guys.